Hey, Dan Passarelli here. Well, the market was off a smidge today, down 1.3% on the close. Was down twice that much earlier, but it paired half of its losses towards the latter half of the day, which is good news. So let's talk a little bit about some of the important things here. Now, just from a pure fundamental standpoint, it's kind of no surprise. I mean, the central banks they have literally been telling us what they're going to do and what they're going to continue to do. They've totally telegraphed it for the past 6 months, and I've been beating that drum myself to sort of help our traders to understand. If the Fed says, hey, we're just going to keep raising interest rates and we're going to try and avoid a recession, that will add jitters to the market, and it has, and that's what we're living through, right? So from a technical standpoint, this is the fifth day in a row that we closed below the 50-day moving average. So at this point, I'm calling the 50-day moving average a resistance area. Now, does that mean it can't make it above it? No, not necessarily. There are times when it's crossed it. I mean, in the past 6 months, it's crossed it about maybe 5 times here, right? So that doesn't mean it can't get above it, but what it does mean is that when the stock market tries to push above the 50-day moving average, it's going to meet some resistance from the technical traders out there. So we'd really need a lot of extra buying pressure, a lot of that good spirit that fuels the Santa Claus rallies, right? So going forward, what do we look at? Well, we could see some volatility. We could see some volatility to the upside if we do end up closing above the 50-day moving average. And if we do that, we have very strong support at the 200-day, very strong resistance at the 200-day, and that's really likely to hold. Or we could see some further selling off to the downside. It seems like a lot of the selling pressure is in. We do have some support levels here at about, call it 370-ish. And down here, well, it's about 350, 360, 355-ish. So, I mean, we could see, and this is a little bit like I talked about in yesterday's video, we could see a move to the upside, but it's very likely to be contained and meet some resistance. And we could see a move to the downside, and that's likely to be contained too and not completely fall apart. So how do you trade those? Well, that's why I've been talking about Credit Spread Genius, and I mentioned Time Spread Genius yesterday as well. Those pair together very well. And so what I'm doing is I'm watching the market, and when we do get down to some of these support levels, I'm looking, at the Credit Spread Genius to see when some of the professional traders are selling put credit spreads and see if those make sense. And if it pushes back above, we're going to have strong resistance higher. And then I'm going to be looking at Credit Spread Genius to see if some of the professional traders are selling call credit spreads. And then it makes the decision really easy to jump on. So that said, I did mention yesterday that we have, I think there's only a couple of days left for a special bundle of both Credit Spread Genius and Time Spread Genius. You probably have heard me talk about these things already, but if you haven't yet, go to the webpage markettaker.com/genius and read about it. You will not see a better packaged deal than this anytime, probably ever. So it's a really nice year-end special that we're running. So go ahead, check that out, markettaker.com/genius. And that page is going to pop up as soon as we're done here. That said, this is Dan Passarelli. Trade smart.